Good morning, everyone. Welcome to Live Trading Action by InTheMoneyStocks. Today is January 18, 2017. My name is Nick Santiago. Thank you all for tuning in this morning. All right, what we're going to talk about today is the financial stocks. So you've had the bulk of the financial companies report earnings now. They are pulling back. A lot of traders are saying, Nick, is this a time to get involved? So I'm going to start off with the most important financial stock that I follow, and that's JP Morgan Chase. They're the real Bank of America, if you ask me. And right now, what you're seeing is JP Morgan Chase falling out of what we call a bullish consolidation pattern. So you had a nice little bullish pattern here. Earnings came out. The stock sold off sharply yesterday, and now the stock is down a little bit today. So when I see something like this, I look and say, well, where is this going to get a bid? First thing you want to notice on the chart are two things. One is the 50 period or 50-day moving average on the daily chart. That's at around $82.25. Next thing you want to do is look at where the stock based before the breakout. And you're going to see that brings you right to around $79. So if I'm a betting man and I'm a trader, what I would say is the $79 level is your spot to get involved for a bounce play on JP Morgan. Very, very simply, markets love to go back to their breakout points. They love to go back to the spot where the institutions came in and popped them up to new highs. That is where you will find the most support. So if you're looking at the trade right here at the 50 MA, I think it could be temporary, but the reality of it is if you get it down to $79, I think that's a spot where this stock can go back up to 88, possibly even $90. So again, $79 will be my level to get involved in JP Morgan. We're going to take a look at one more stock here, and it's called Goldman Sachs. They reported earnings this morning. Stock is selling off. It sold off yesterday ahead of the earnings as all financials were down. Today it's selling off a little bit more. So a lot of traders are wondering probably where Goldman Sachs is going to be a play. And again, it's the same theory. You have a breakout right here at around 210. If you go right to the low of this candle, that brings you to around 215. There's the gap window right there. So that's going to be your big level, in my opinion, 215. That's where you want to be involved in Goldman Sachs for a bounce play. So again, I'm not saying this is going to go down every day. There'll be bounces. Nothing goes down in a straight line. But if you do get a chance to get Goldman on a pretty good pullback to the 215 level without a lot of consolidation above hand, this should serve as an excellent bounce level for Goldman. And where could that go? That could go right back up to 240, 250. So again, we'll look at Goldman Sachs closer on the charts right around the 215 level. Again, what you want to do is look for the breakout levels, look for the pullbacks, and where the stock broke out, and that's where you want to get involved in these equities. That's usually a very, very good risk-reward trade, and it's a trade that I use very, very often. All right, with that being said, again, if you want to trade alongside of us, come on over, take a 7-day free trial to the Research Center. You'll see all of our setups there. You'll also get our cycle work. You'll get all of our content, and you'll receive our No Hype Live broadcast, which allow members to come in and ask us questions about anything market related. We do that twice a week on Thursdays and Sundays. It's a fantastic program. You get all of that right in the Research Center product. So come on over, take that 7-day free trial to the Research Center, try it out, and you'll see what it's all about. With that being said, everybody, have a great trading session, and we'll see you on the charts.